Welcome back to the Global Ledger. I am Justin. This is a special controversial edition. Part of our myth busting every 10, 20 episodes series. So today's claim is an exciting one. It's, I think, a loud one right now in finance. At least with that's what the algorithms are putting in front of me. But that is crypto is going to replace the dollar. And here's the short answer. No, it's not. But it is doing something much more interesting. Crypto isn't replacing the dollar. It's replicating the shadow banking system. And I think with different instruments, different collateral, but the same balance sheet mechanics. So let's break this down clearly, calmly, and mechanically, the way we always do here on the Global Ledger. The dollar isn't just a currency. It's a system. So people talk about and say that the dollar as just some piece of paper, but the dollar is actually a echelon of promises, a network of balance sheets, a global funding system, and a set of institutional backstops that work together. The dollar system includes the Fed, treasury markets, repo markets, dealers, offshore euro dollar markets, money market funds, custodians, clearinghouses, collateral standards, swap lines. I could go on. Crypto doesn't replace any of this. It simply isn't that. And that's okay. That's okay because it's actually replicating something else entirely. And what I think it's doing is crypto is building a parallel money market, not a parallel currency system. Bitcoin is not replacing FX swaps, repo, commercial paper, treasury bills, dollar deposits, but crypto is replicating activities that look like secured funding, collateralized lending, maturity transformation, leverage, dealer-like market making, synthetic dollars, stablecoins. So in other words, crypto is reinventing shadow banking with different assets. That's what I think. Stablecoins, I would say, equal money market funds. You've got the CeFi and DeFi lending, I think is repo. Exchanges, that equals dealers. What's another example? Bridges and liquidity pools, wholesale funding, right? Meme coins, I think are equity-like, speculative assets. So this structure is familiar, and so is the plumbing, and I don't think that's a coincidence. So let's look at this as the truth, and let's look at crypto, the crypto dollar as a shadow dollar. So I'm going to be extremely direct. So we've got USDT and USDC are not killing the dollar. They are the dollar. They're synthetic dollar liabilities. They're short term. They're redeemable, confidence based, function like deposits, right? But outside the regulated banking system. This is precisely what euro dollars were in the 60s. SIVs were in 2006. Shadow money funds were in 2007, and what repo liabilities are today. So stable coins are crypto shadow money. And like all shadow money, the key question is what backs it and who is the lender of last resort. That's where things get fragile. So what's interesting, crypto built a dealer system really without any dealers. Crypto exchanges, what do? They quote prices, warehouse inventory, hedge, make markets, earn spreads, and manage liquidity. And that's what dealers do in the traditional system. But here's the catch. In traditional markets, dealers have a backstop. In crypto, they don't. No central bank, no repo facility, no discount window, no treasury market to stabilize collateral. When crypto dealers, such as exchanges, market makers, lose funding, markets crash instantly. The liquidity vanishes. You'll see a blowout in spreads, and contagion starts to spread. So FTX wasn't a unique event. It was the 2008 shadow banking crisis, just without the Fed to stop it. So that's what happens when you replicate a dealer system without a backstop, without a lender of last resort. So without a backstop, crypto can't become base money. People say, this is everywhere, that crypto will replace base money. But base money isn't a ledger entry, a token, a digital asset, or a commodity. Base money is the thing you settle final obligations in. It must be universally accepted, legally recognized, stable in liquidity, elastic on demand, and backstop in a crisis. And crypto has no settlement guarantee, no liquidity provider of last resort, no swap lines, no collateral standing facility, no treasury equivalent asset, no institutional leverage architecture. Without these, you don't replace the dollar. You replicate the dollar's shadow system without the safety rails. Crypto is not competing with the dollar. It's competing with money markets, hedge funds, and shadow banks. Crypto killer apps are trading, leveraging, liquidity, transformation, stablecoins, yield, collateral. What else? Microstructure innovation. That's not currency competition. That's market structure competition. So crypto is competing with offshore euro dollars, MMFs, SIVs, repo markets, dealers, levered hedged funds. So not with the Fed, the Treasury, or the global dollar system, because to replace the dollar, you'd have to replace the Fed's ability to stabilize the system. It would have to replace the entire Treasury market, the global collateral ecosystem, the swap line network. It would have to replace the dealer backstop, and it would have to replace the legal system. And so crypto is not doing that. It's doing something simpler and honestly, I think more interesting. It's rebuilding shadow banking on an open ledger. That's the breakthrough. That's what I think. And there's no hype in this. This is really cool, really interesting. And I've learned a lot about crypto. There's still more to learn. And so but when we start talking about crypto, replacing something like the dollar, I just don't see it. So I don't think crypto is the end of the dollar. It's not a replacement for central banks. And it's not new base money. It's a fascinating experimental market infrastructure, a new form of collateralized finance, a laboratory safe for liquidity innovation, and a transparent recreation of shadow dealer activity. So when you see crypto as market plumbing, not as in an apocalyptic alternative to the dollar, everything can kind of clear up a little bit. I think the fear can fade because the mechanics they remain. So and mechanics, the good thing is it can be they can be understood. So thank you for listening to this special episode of the Global Ledger. We're gonna aim to have these really loud, controversial discussions about what's happening, and tie it into money and finance and we'll do our best, I should say. I am a student, continue to be a student, and will always be a student. But today we cut through as a student one of the loudest claims in finance, in that crypto isn't replacing the dollar. I think it's rebuilding the shadow banking system. So just with different assets and different collateral structures but the same liquidity dynamics. So we're gonna jump back to our normal series, which would be episode 21, and as we continue to map the architecture of the financial system. So once again, I'm Justin, and thanks for being here.